I tell you, if I was going to give any bit of advice as around this business and financial acumen program or topics, one of the greatest ways you can build your credibility, build your career, and build your company is to engage around these calls. Being able to sit back and say, okay, what is the big picture, what our organization is trying to do? What are their goals and objectives going forward? And but most importantly, what can I do to impact that? Absolutely drives the success of your organization. And what we find, though, is a very small percentage of employees that are publicly traded actually engage or listen around these calls. Now, I don't think it's because they're just too busy. I think what it is a lot of times it's hard to kind of decipher them. That's what we want to try and do today. I'm going to provide you a simple tool that will allow you to take both the strategic focus of the company as well as the financial performance, and then go back to your role, say, what am I going to do about that? If I'm an investor, what am I going to do? If it's a company I'm selling into, how do I develop a stronger relationship with my customer? If it's my own company, what can I do to drive the results of our organization? That's how I want you to think about what we're going to do today. Well, folks, it looks like those tools are working just great. So I'm going to go ahead and jump in. We're going to start sharing screens and let's jump into this. Let's get going today. So you should see my screen here up and running. I think it should be up and all ready to go. So we're looking at Rivian. Let me give you another poll question. So we're talking about earnings calls, and we're going to walk through a tool on how to use those or assess those earnings calls. Here's my poll question. I'm just going to open a quick poll. And the poll is going to tell me, when's the last time you had a chance to listen to an earnings call? You're coming to a program on how to listen to them. Well, when's the last time you've listened to them? Hey, I did it earlier this year. Obviously, we had Q4 already. That would have happened usually in that kind of late January through all of February. And then just 3 months later here, we just finished Q1 that ended in March. And so you basically have start late in April and all through May, you're going to have all these earnings calls happening. In fact, Rivian's Q1 call is going to happen. I think it's May 7th, if I remember right. So here in just a couple of weeks, we'll be looking at their most recent quarter. So last time you listened to an earnings call, going once, going twice. Anybody else want to respond? I'm going to close it here. We'll see what we got. Okay, share the result. About 53% of us, it's this year. Awesome. You've done that. You've engaged around. Last year, it's been a while for about 15% of us. I've never attended earnings call, 16%. Well, folks, my goal today is to inspire you enough to say, look, I'm going to take a chance. I'm going to take this tool and I'm going to look at the company I'm working with, a customer I sell into, or just a company I'm interested in, just to know more about them and or invest in them. I want you to take this tool and use it. My guarantee is you use it, absolutely will build your capabilities within an organization. Well, what's interesting about these calls, there's kind of a couple of reasons why these calls happen. Number one, it's a way for the executive team to communicate to the market the business performance of the company. Now, they're required, Rivian, all publicly traded companies are required to submit their financial information to whatever exchange group they're working with. So here in the United States, we're talking the Security Exchange Commission. They got to submit that financial information on a quarterly basis. The document they fill out, it's called a 10Q. If it's an annual basis, they call it a 10K. Now, the easiest way to think about this is many of us have just done our taxes, right? You filled out a 1040 document to fill out your taxes. All 10K it's the actual form a publicly traded company fills out and submits to the SEC. So they have to get that information to the Security Exchange Commission. But in addition to that, they have to get it to their investors. So any company, any individual or organization that's invested in Rivian, they have to get access to this information. Now, with the advent of PDFs, it's just available. They send it, or it's available on their website. And you can go get the 10K, 10Q, and access that information. Well, that's just the information. It's just a bunch of words. Well, think about that. Do I just want my investors, do I just want my customers, my partners, just to look at the words? Or do I want a chance to kind of explain what's going on? That's what these calls are. Well, what's interesting is they have these calls every quarter, and yet if you do some basic statistics, data, here's a stat that comes from Harvard Business Review. Even with all these calls happening every quarter, Harvard Business Review suggested that 95% of employees don't understand company strategy. 90% of employees don't understand these key metrics and measures their executive team's talking about. Well, that's pretty tough. You're looking at Rivian, started in 2009, huge plant that they do a lot of their production in Illinois. Initial public offering did an IPO in 2021. Imagine you're the CEO, right? The CEO and founder, Mr. RJ here, founded in 2009. Transitioning, they're making this, so they got hardware, the vehicles, but they're really also focused on software as a service and how to sell that. They've got a new partnership with Volkswagen where they're making money off of their software. They got all this internal pressure to increase margins, optimize operation. They haven't been profitable at a EBIT or what we call operating profit or their net profit. They haven't been profitable yet. So since 2009, they have not been profitable. Now, we don't get all that data, but since 2021, I've got every single quarter and they haven't been profitable. Yet they had this quarter at one level of profitability, they're finally profitable and they're really excited about that. All these external factors that are impacting them as they look at kind of the future of electrification, facing intense EV competitions. Folks, obviously, we're very familiar with Tesla. Rivian's a player that we're aware of. But not only that, you're seeing GM, you're seeing Honda, you're seeing all the big players going after the EV market and the future of that. So as you think about that, put the CEO hat, you're running this company, you got all this information, your quarter or annual report. Well, what is it you want your employees to know? What is it you want your customers to know? Well, what about your shareholders, those that invested? And of course, a company like Rivian, this partnership with Volkswagen, other partnerships they have in place, their supply chains, they really see their suppliers as partners. The only way they got profitable, to be honest, was they really partnered and sourced their supplies. Think about that. You're starting a new company, a new automotive company, and you have to build the vehicle, right? Well, you got to go out and find parts to be able to build this. Well, when you're brand new, you don't have the volume where you have enough, parts that you can go get lower cost on that, but also you have unique ways of putting it together. So over time, you start partnering with your supply chain to help you build even a simpler way to produce your vehicle at a faster, safer, et cetera. So that partnership is absolutely valuable as they look to try and become a profitable organization. Well, folks, that's who we're going to talk about today. We're going to look at Q4 full year financial performance for Rivian. Now, interesting enough, I'm very familiar with EV vehicles. One of the things that really kind of was a new idea to me, and I found out probably 6 months ago when my colleague here told me we're going to look at them, is that this is I see them all the time. These vehicles, the actual trucks and SUVs, I see them every once in a while, but we see them every time as they come to my house because my wife and my kids are always doing Amazon. These are the Amazon electrical vehicles. The big utility trucks are built by Rivian. So they have over 20,000 of those trucks on the road, and they're all built by Rivian. So big player with a company I interact with quite a bit. Well, folks, here's my guarantee. As we look to jump into the tool, the resources, et cetera, I've been doing this for a lot of years. And a lot of people will come to our programs and they get the foundation, what I call our boot camp, right? How to understand 5 fundamental drivers, being able to understand how different functions impact your business, how to align with your executive team, looking at financial statements, and with the end goal of being able to make better decisions. But what I find is you can come to a class and get a lot of great information, but if you don't do something with it, you're not going to succeed within your organization. So my guarantee, I say it when I teach my courses, I say it here today. If you will take this resource, even if you haven't taken our course, by the way, although we'll talk about ways you can get access to our content at the end of our program today, but just going through this 2 to 3 quarters consecutively, you will, at this guarantee on the slide here, you will build your credibility. You'll have leaders in your organization saying, "Hey, how do you know so much about our business?" I hit the wrong button here. How do you know so much about our business? It'll build when you're credible within your organization, you go to make a business case to access cash. You want to hire new employees. You want to go in a certain direction. Well, you'll build your credibility because you're aligned with what the organization is focused on, which if you can build your credibility, when opportunities for promotion come up, opportunities for new programs, who's the first people you're going to think of? It's going to be you. It's going to build your career, which all through this whole process, you're going to drive the success of your company. So folks, that's what we're going to do. Well, let's jump in and see if I can inspire you enough to say, you know what, Brent, I'm going to do this. There's a 3-step, very basic process we're going to cover. You got to prepare for these calls. There's analysis you got to do. And the most important right here, if I was going to put a big, smiley face, star, whatever you want to do here, this is it. You got to do something with it. So let me jump into kind of walking through the tool. The first thing I want to highlight is just high level. What are these calls? There's about 16% of us who said, I've never been on a call. They're broken. The typical call is broken into 2 sections. The first is what they call the prepared remarks. This is where you get your CEO typically and a CFO. Typically that's the 2 group, but they can have anybody on there. And what they're going to do is they're going to walk through their performance. They're going to say, okay, here's what we said we're going to do. Here's what we did. Here's what we're going to do is basically what you're going to look at. So if it's a great quarter, they're going to say, here's what we said we did. Yeah, we did that. And then we did more. Now, let me tell you what else we're going to do. Now, if it's a tough quarter, it's going to be like this. This is what we said we do. Well, boy, there were some headwinds. There were some challenges, global economic or geopolitical issues hit us. So our numbers off. So here's what we did. We restructured, we changed, we adapted. And now we're going to go and expand and grow our market. So that's usually the first, somewhere around, depending on the call, somewhere around 15 to 30 minutes. Then from there, it switches. And then you have analyst questions. Now, these are analyst questions where you actually have those analysts that track their stock are going to get out and ask clarifying questions. So this is like Barclays, it's Wells Fargo, it's these big investment firms, right? So they get a chance to ask and clarify those questions. That's typically what the call is. Now, the short one would be like 45 minutes. A long one would be over much more than an hour. I've seen some like 2 hours or whatever. But the most common is going to be kind of that 50 minutes to an hour time frame is what you're looking at on these calls. In fact, their call was just under an hour's time. So that's what the call is. Let me talk about the prepare phase. What do you need to do to prepare? The first thing you got to do is locate the call. So what I'm going to do here is I'm going to quickly show you how to locate that call. So let me just jump to an amazing website. So what I'm going to put in, I'm going to put Rivian, and I want to look. What do I want? Well, I want 2024. That's what I'm looking at. That's what I know. And it's obviously here in a couple weeks, you're going to get their Q1 information. But I just jump in and start. Right now, it's trying to give me their 10K. But I want to look at the earnings call. So I just start typing earnings. It's going to call, et cetera. I click on that. And right at the top, you got Rivian. Now, you'll notice there's a bunch of these third-party. Motley Fool's a well-known one. Seeking Alpha, Yahoo Finance, et cetera. There's third-party groups that will track this and provide information. But I love going right here, right to the source. Go to the company itself. It's a great way to kind of access that information. So as you look at this, it's automatically here. Investor relations. So I look, what am I looking for? Well, I want to look and see what happened in my quarters. I scroll down. Here, we're getting ready for Q1 to come out. They actually have a production and delivery. How much did they produce? How much did they deliver? That's already out as they get ready for this call. Let's see here. But right here, I got full year information. This is their press release. Now, what is a press release? Before the call actually happens, like the day of, the morning of, et cetera, they'll ship to all the analysts and really make it available to everybody. It's a nice overview. You want a quick summary without listening to the call. It's going to give you a nice overview of what happened in the call. What's nice about this is you often don't get the full audited financials until a few days, even a month after the actual 10Q or 10K. Well, they often will put in the press release their financial data because they'll get it to the analyst, okay? So I'm looking for that. I love to get access to that, want to access that. The production delivery, again, it shows how much they produce. That's a volume question. They actually do a letter on the annual from their CEO to shareholders. This is a great amount of information. This is a little bit of kind of an annual report. They have some additional information than just communication from their CEO. That's a great data point. And then the webcast, the actual call itself. Now, if it's prior to the call, you'll get this registration form. You fill it out, dial in, and it'll give you access to the call. So let's say if you want to register for their call that's going to happen on May 7th. You fill this out. It's going to give you that information to log into it. You can put it on your calendar. You're ready to go. But once the call has happened, you can also register. Just put your information in, and you've got access to the recording of the call. So you can actually listen to it after the fact. Now, the third thing I typically want to access is a transcript. Now, you'll notice I don't have any transcript here. Sometimes they provide it for. Now, what is the transcript? It literally is word for word what was said in the call itself. Now, there's a number of places. If they don't provide it, you can access it. If you want a quick and easy one, I love this one. It's called Seeking Alpha. I don't get paid to promote them, but I use this all the time. Motley Fool would be the same one. And all I'm going to do is I type in Seeking Alpha. I do Rivian. It's going to give me that. And right here, I'm going to get my transcript. So here is word for word. First of all, it says who was on the call. Here's the company participants. Here's all the analysts that were on the call. And here's word for word what was said. So if you can't access the call itself, you don't want to listen to it, you just want to read it, I often will download this and use it. By the way, with AI today, downloading this, you can plug it into some of your AI tools. It can really give you some nice summaries or read it. That's a great resource for you. Well, folks, how do I access it? The easiest way to do it, you're going to jump to Google, just type in what you're looking for. I'm going to look for it. Now, look, it not only has Q4, but it has Q3 the prior year. In about 2 weeks, you're going to have Q1 here. So you can go back and look quarter over quarter what happened and get that information available to you. This is all publicly available for you. Okay. Well, enough of how to access it. Let's jump back to where we're at before. Here we go. Share that screen. I should be looking at my screen. There you go. Okay. So let's go back to where we were. So that's how you locate it. Next step. I got to review my notes. You say to me, Brent, what do you mean by notes? I don't have any notes. I've never done this before. That's okay. One way you can do that is you could go back to Q3, just like I showed you, go to Google, type in Q3, get the quarterly information. You can kind of see, just review maybe their press release if you wanted, or download their transcript, review that, and you can kind of see what they said they were going to do. Folks, if you haven't done it, no worries. Just go ahead and do it on the next one. And what's going to happen is whatever you did, like for example, we're going to go through Q4. You're going to have all the information for Q4. So here in about 2 weeks, when you go to Q1, you just bring these notes up, review them, and you're ready to go on the most recent quarter. Last thing I recommend is do this with a group. It's always better to do it with a colleague, peer. If you're a leader, bring your team together. Imagine if a leader took 1 hour a quarter to kind of review what was communicated in the call as a team, and then with the goal in mind saying, what should we do in this next quarter to drive our corporate results? Folks, that's how you build your credibility and it builds your career. Employees often are wondering, why are we doing this? What are we doing? Your ability to communicate that and then bring it to our real world, what can we do to drive that? That will build your credibility within your organization. Okay, so that's the first phase, prepare. The meat of the tool is what we call the analyze phase. What do I need to do to analyze? Now, to do that, I wanted to open up my chat box and all my team members, all my graduates who've been through our program. Here's what I want you to share with me. We're going to walk through a quick review of a simple framework. For those that have never been through a program, I'm going to share with you today a simple model of business. As you think about fundamental drivers of business, here at Acumen Learning, we'd suggest to you that there's 5 fundamental drivers. Those 5 drivers are on the screen. You've got cash, profit, assets, growth, and people. Now, what's the value? What's the purpose of this framework? Think of it as a simple mental model. As you think about the communication you're getting from your leaders, as you think about the decisions you're trying to make, if you can come back and say, how is my decision driving cash? How is it driving profitability? How am I taking the assets I have, whether they're tangible assets, equipment, materials, etc., or intangible assets, processes, IP, technology, my team, to drive cash and profitability? As you think about how are my decisions helping us to grow and expand our company? And the core of the model is saying, how am I impacting that external customer, those who buy or use my product or services, but also how do I internally drive results? So here's what I want to do. I'm going to take 2 minutes is all. And let's review this for those that have never seen this, a simple way to think about this. So when you think about cash in a business, and absolutely important for Rivian, if they've not been profitable, if they're not driving positive free cash flow, You got to have cash to withstand that. So let's talk about the importance of cash. Fill in the blank for me. Cash is blank. What would you say? Cash is, David's giving me the answer. King. Yes, king is absolutely great. Cash is king. Well, let's get queen in there. Some might even say it's the lifeblood of a company. It's the oxygen of a company. Now, what's interesting is by raise of hands, how many of you woke up today and said, I want to generate more cash for our company? Most of us don't think that way. We may want to drive more revenue. We want to manage our cost. We want to produce more products or have a better experience with our customers. The outcome of all those folks is right here, cash. Now, cash is king. It's our oxygen. It's vitally important for a business. In Rivian's case, if they don't have enough cash, they're not profitable. Think of them as a startup since 2009. How many companies in your personal life, if you're starting your own business, could you go from 2009 to 2024 and not be profitable, not generate positive cash? You got to have a lot of cash to do that. And they do. They have on their books right now about $8 billion of cash. With some other things, they've got about 10 billion. Then they have lines of credits or loan opportunities for another 7 billion. That allows them, and they speak to it. This will fund our operations. They're expecting to get to positive free cash flow. I think it's 2026 or 2027. So they're still forecasting they're not going to be profitable. Okay, so cash. I got to have enough cash to do that. Well, income. We talk about profitability. There's two levers. I can increase one lever, or I can reduce another to drive profitability. What are those levers? Anybody remember from the courses? How to drive profitability? You want to grow profit in your company. You got to increase something or reduce something, or the combination of both. What are those? Excellent, Toby. Thank you. I got to increase my volume of products or services I'm selling. Okay, I get volume. I can also increase my price. Now, what is this top line, though? What am I talking about here? This is all revenue or sales right here. So I want to drive my revenue or sales. Those are the same thing. These are the same things in business. I got to drive my revenue sales through better pricing or volume. And then, yes, many of you got it. I got to lower my costs. If you look at it on a kind of a per item basis, or I want to reduce any of my expenses. If you look at a company as a whole. Profitability is probably the lever that we hear a lot about, and they are not profitable. This is a big deal. A company not being profitable. The question is always, can you get to profitability? Now, if you have enough cash, you can withstand not being profitable. But eventually, you've got to be profitable as a business. Now, if I want to figure out what was going on from a profitability, I'm going to look at that income statement. Now, as we talked about assets, you talk about anything we own or control which has value. If you think about Rivian, what do you think they own or control which has value that allows them to drive profitability and cash? What would you say? It's an automotive manufacturing company, patents, there you go, absolutely. They have cash, by the way. Cash allows them to drive success. What else would they have? Come on, I've got some manufacturers on here. What do I got to have to produce? I got to have software, intellectual property. I got to have a plant. I got to have equipment. I got to have inventory. I got to have all these things. There you go, George. Resources to drive this. Now, the question is, how much do I have on hand versus how do I maybe approach it just in time? I get it when I need it. Boy, I have a bunch of inventory that it becomes obsolete. There's new technology, especially in a company like this. There's so much technology in these EVs. Boy, if I got a bunch of, energy cells, batteries, et cetera, and all of a sudden some new innovative technology comes out that allows us but you have to have a different type of battery. Well, then all the batteries I have on my inventory are no longer valuable, right? So it's very much focused on what do I have? How do I utilize what I have? If you want to see what's going on from an asset perspective, you're going to look at the balance sheet. Well, growth then is what investors expect. And as a publicly traded company, growth gets a lot of time and attention. They expect that growth. And then people, when we talk people, we're talking both the external customer, those that buy or use the product or services of Rivian. So, of course, Amazon would be a big one for them. Individual customers, maybe fleet groups, et cetera, are all external customers. But then internal customers, how well do operations, finance and accounting, sales, safety, maintenance, how well do all those organizations come together and get great execution? That's what this 5-driver model is all about. So now as you take the 5-driver model and you're going to assess a company, how do I use it? Well, basically, I'm going to use it to say, well, what are they talking about? Cash, profit, asset growth, and people. Which driver they focus on the most and why? Then use the model to kind of make sense of what they're trying to do and do the same thing around the financial performance. And that's basically what the 2 tools are that I'm going to share with you. So let's jump to the first tool. It's called the executive alignment. Here's how you use it. Listening to these calls, you're going to listen to what are they talking about? And the first step of it is just track. How often are they talking about cash, profit, asset growth, and people? It's literally slash marks. How many times do they talk about cash? How many times do they talk about profitability? Okay, so that's the type of stuff you're doing. Now, if I'm actually listening to the call, I'll just grab a piece of paper and just start doing slash marks. I got to be honest. I don't like to try and do it on the fly. I like it better when I grab the transcript and I just read it. I just write, oh, here's cash, here's profit, asset growth, and people. Sometimes I'll even listen to it with the transcript and kind of go through it. I get more to hear their tone of voice and some of those things. But at the end, you're going to end up with a document that's going to look something like this. Okay? That's what it's going to look like. So you go through this process of going through and you do all these slash marks. Once you're done with that, you're going to go back and answer 4 simple questions. Now, just for some of you who are saying to me, Brent, hey, I've never done this before. I haven't taken your class. I know what cash is, but how would I think about cash in a business? Well, don't worry. Right here, I give you a definition of what we mean by cash or what the key metrics of cash are. In addition to that, what are the potential words you're listening for? So, for example, if I'm hearing any sort of dividends or distribution, stock buybacks, issuing of stocks, capital expenditures, those are all cash. That takes cash. Deployment or reception of cash is what we're looking at. It's the same thing down here on profitability. If I hear anything about EBIT or EBITDA, I'm thinking profit. So you go through that exercise and you answer these 4 questions. Which business drivers seem to get the most attention? I love the second point, and why. What's going on in the business? What's the customers doing? What's the regulatory? What is supply chains doing? What's going on? Who are they talking to? Are all factors I consider. What are the 2 or 3 main points the executive was trying to make? What are their goals, objectives going forward? And finally, based upon what we've heard, what did the analysts say? So after they get the report from the executives, what questions or concerns did the analysts raise? Now, one of the things I like to do as well is once the calls happen, over the next week to 2 weeks, I kind of look at what's happening to their stock price. Now, it's a little difficult right now, to be quite honest, with all the fluctuation with tariffs and all these things that are happening. The market's going all over. It's hard to define. Somebody does a call and immediately, did it change because of their call or because of all the movement that's going on here in the first 4 months of the year? That being said, in a regular cycle, you may be able to see, okay, what's happening? Is our stock price going up or down after the call? You can look at what analysts have written and said about it, et cetera, to kind of get a feel. How's the market viewing it? Folks, that's the tool. We don't have time in the next 30 or 20 minutes or so that we've got to read the whole thing. So what I've got is I've got just 2 quotes, and then I'm going to fill it out, walk you through what I found. So let's start with the first quote. This comes from RJ, their founder and CEO. And the very first sentence, we've got one of the drivers. So in the chat box, I'm going to read through this. What I want you to do in the chat box, tell me what you're seeing in this communication. So here we go. I'm pleased to be able to speak to our positive gross margin in Q4. What driver are we talking about there? Toby, excellent. Yep, Andrew, profitability, gross profit. When you hear margin, think of margin. We're thinking profit, okay? So positive, that speaks a lot. Remember, I told you they've been negative. They've had losses every quarter until Q4 of the gross profit all the way down to net profit. Well, this is a result of outstanding effort from our team. What driver are we thinking there? Driving a focus on cost, driving a focus on continuing to build our demand generation. So you got cost, you got demand generation, and of course, looking at opportunities to improve efficiency across the business. What drivers do you see? There's multiple drivers here. What drivers? So yeah, profit's going to be there right there. Cost reduction and increasing your demand generation. Remember, we talked about volume, selling more. So more people wanting to buy, That's going to impact profitability, but that's also people, right? Demand gen, people buying our product or service. So you got people there. What is this opportunity to improve efficiency across the business? Efficiency is always going to drive growth, going to drive profitability, et cetera. But it's a lot of assets. As you think about assets, efficiencies, how well can I produce this vehicle? Where can I lower the cost on my inventory to lower costs? In fact, one of the things he's going to talk about is going to talk about a 31,000. What's the next sentence? Here we go. With that, we removed 31,000 COGS. Anybody remember what COGS was? Cost of goods sold. So they reduced $31,000 a cost per vehicle on the direct cost of producing that through efficiencies, through sourcing their inventory, volumes of inventory they're buying. They lowered the cost per unit to produce by $31,000. Folks, these vehicles go on average $86,000. So the fact they're able to reduce that cost, that allows them to get better profitability over time. So again, you got profit there, reduction of cost, eventually is going to drive cash flow. This was a really important milestone for us as a company, and something Claire is their CFO, and myself have spoken to a lot over the course of the last year. And there's a number of drivers of this. Of course, cost reduction. What driver I just spoke to is a major driver. But we also had an increase of revenue. What driver would increase the revenue go? That's going to hit right here. It's also going to hit here eventually once you collect it. An increase in revenue on a per unit basis as the mix that we're producing. So we see translate into higher selling prices. For those who've been in my class, you'll remember this hand gesture. So if this is revenue and this is cost, as revenue increases, you're going to grow your profitability. As revenue decreases, you're going to grow your profitability. So if I can sell more or get higher price, I can increase my revenue, which should increase my profitability. Now, if I can increase my revenue, but also lower my cost, that's how you're really going to get to profitability. So you have both of those levers playing a big role, and that's what drove their Q1 profitability. Q4 profitability. We also see an increase in regulatory credit revenue, which Claire will speak in a moment. So folks, what do we notice? What drivers can you see automatically coming up? Just scroll through our chat. Profitability is definitely be one of the key ones they focused on. Well, here's another one. I'm going to have you just kind of review this, read on your own, and just put in the chat box. What do you see? I'll give you just 30 seconds. Read through it. What do you see? I'm going to underline words that are potential trigger words for our drivers. Oops. So you see team at the top. We got people, right? Positive gross profit. We're gotten profit. Now, if you said cash, it's okay. Profitability, if we collect it, eventually becomes cash. So it's hard to kind of differentiate those two. That being said, definitely profit, could be cash. This whole idea of materials, conversion, depreciation costs, you're dealing with some balance sheet items that potentially are going to drive asset utilization. So assets could play in that, could also lower cost as well. So it's profitability. All these increases are growth. And then you have the cost and profit numbers we already spoke to. Well, folks, that's how it works. It's not a rocket science. Now, we do 1,200 of these or so sessions a year, different companies, different industries. And what we find is don't get caught up in it. We all have to have the exact same number of slashes. That's not the point of this. It's just a simple way of taking the mental model of 5 drivers and say, what are they really talking about? They talk about cash, profit, asset growth, and people. Then go to answer those questions. Well, your tool might look something like this once you completed it. Here's what I did, and you'll notice the ones that are standing out, I got profit and assets. Growth is right behind it, even cash. You had a lot of conversations about cash. So really the top, all 4 of those were pretty close. Maybe higher, maybe lower based upon what somebody else, if they were to go through. Well, I take that and then I basically go through and answer those questions. So which business drivers seem to get the most attention and why? What are the 2 or 3 main points, et cetera? So that's what I'm going to do. I'm just going to walk you through a quick analysis of mine, take 5 maybe minutes, go through it the best I can of what I saw. Okay. So let's start with this first one. Which business drivers seem to get the most attention? I saw profits and assets. Now, the reason I said assets, they talked a lot about the R1, R2, R3, the new plant that they're producing, lowering their inventory costs, which obviously impacts profit, but that's a big asset. If you look at their balance sheet, inventory is going to be a big part of their cost structure. So let me just show you what I mean. So why did I say profit and assets? Well, here, right in their report, look at this. We're talking achieved Q4 2024 gross profit. Folks, this is the first time since 2009 their gross profit has been profitable. In addition to that, they were able to 721 million improvement in Q4 2024 adjusted EBITDA. Now, if you actually looked at this, that looks really good. It is. They've got better. It's still negative, though. They're still, for every $100 they bring into their company, they actually have a loss at their EBITDA level. So it's getting better. They're moving more and more towards profitability. They're not there. But right there, you're hitting two initial big picture profitability measures. Well, what else did I see? Well, real positive on getting positive gross margin. Reduction in cost of goods sold. That was a big emphasis. We saw it in the quotes. And then how can they get better at what they do? Now, part of it is just getting more volume allows you to get lower cost per unit on your inventory cost. But in addition to that, they're partnering with suppliers that allows them to get more efficient in their production process to lower, something as simple as just a certain type of bolt. I have kind of a generic one, but then we create a very specific one for the vehicle I'm doing. It increases lowers production time. It lowers the cost per unit in production. There's various ways to look at that, but huge efficiencies that are driving that profitability. What are they looking ahead to? Well, the R2, R3 release. So you talk assets, two of their big opportunities, R2, R3. R2, they're expecting to come out in 2026, R3. Their R1 has a dual, dual engine, I'm losing the term. Help me out in my chat box. And they're moving to a 3 motor. Thank you. Dual motor to a 3 motor, and they have a quad motor. But there's a lot of demand for that. That's increasing the price per what they can sell it for. It's amazing. They're talking about the efficiency of what it does. But all those new assets are coming out. They're selling them, which is going to drive more revenue, eventually drive profitability. All the tariffs, all the conversations about building America, guess what, folks? They were right there. We are aligned with the administration because they have their Illinois plant and they're building a Georgia plant. All their products are produced in the United States. A big thing they're very proud about and they talked a lot about. So this new Georgia plant, and here's a little picture of this huge plant that they're producing to manufacture. Upcoming, capacity expansion at their Illinois plant. New features like hands off and eyes off. These are technologies. Folks, there's going to be a day in my lifetime where we're going to get in the car. You're going to sit in there and it's going to drive you to your house while you're sitting there, I don't know, working on a computer, watching Netflix. I don't know what you're doing. It's going to happen. And you see it happening already with their technology that they're putting in place. So a lot of discussion around both profit and assets. Profit on when are we going to get profitable? Assets around the new technologies, new innovations that they're going to be able to sell to provide more profitability in the future. Well, so what were the 2 or 3 main points? This kind of profitability milestone. Well, let me just show you a little history. Look at this P&L. You don't have to have gone through one of my class. When you look at a P&L, we often talk about bottom line. Well, where's the bottom line? It's not rocket science. It's at the bottom of the document. Oops, excuse me. So right here, we got net income. Notice this number. This is 2022, 23, 24. They had a net loss of 6.7 and change billion, by the way, 5.4 billion to 4.7. So this is where they are. Now that is improvement, right? But we're still a net loss. So let's break it down. Here's their gross profit number. See right here? Gross profit. All of them are negative. The revenue they bring in versus the cost to go out, they have a loss. Well, So you got to break it down, because for year 2024, they're at a loss. Well, let's look at the actual quarters. So this is actually started in 2022, but look at these numbers. These are all the gross profits by quarter. So all negative numbers. Here we go. The first quarter. Now, folks, you might look at this and you say, oh my goodness, why are people investing in it? Why would you do this? Folks, if you were to look at Amazon, you would see multiple years in their first years where it was losses. You look at Tesla. They started in 2003, 6 years before Rivian. Tesla was not profitable at a net profit margin until 2020. If you were to compare Tesla's time frame to Rivian's, they're going to hit at about the same time, 2009, so 6 years later, and they're forecasting to be profitable in 2026. It's about the same time that Tesla did. And with 4 years, Tesla became the most valued, highest revenue generating automotive company in just those since 2020 to 2024, with $36 billion of cash, huge profitability numbers, et cetera. So in the end, when you get a new technology, think about Henry Ford back in early 1900s, going from the carriage and horses to vehicles. That transition takes a lot of upfront investment and dollars for the expectation to eventually get there. Now, Tesla's done it. So Tesla, there's a lot of scrutiny around Tesla. You're not hearing as much around Rivian because you see Tesla did what now Rivian is doing. So that was a big kind of key message, right? Rivian achieved positive gross margin in Q4, first time ever, by managing cost and better revenue mix. The R2, big point, launch in Central Rivian's future with a redesigned platform offering dramatically lower cost structures. I mean, they're taking huge dollar amounts out of the cost per vehicle because of their new technology that they're developing. And then the big joint venture and selling software as a service, the partnership with Volkswagen was a big conversation piece for them. Well, what are their goals and trends to move forward? You see the theme. It'll play through what they focused on, which 5 drivers, what were their key messages to their goals and objectives. Rivian aims to continue to improve profitability. That's a big focus for them. Ramping up capital efficiency to produce the R2 by 2026. Get that out running. It's lower cost, can sell at a higher price, a lot of innovations in it. They're excited about that. And then the software as a service, looking to get to 1 billion in revenue from software as a service opportunity for them. So what are some of the key trends? Vertical integration. So again, building out their access to suppliers, et cetera, allowing them to get a lower per unit cost. Simplification of vehicle architecture was a key trend for them. Invested in the AI, how AI is going to play a role in the future. And the big objective to reach positive EBITDA and free cash flow by 2027. They're looking to get profitable in 2026, but actually have positive free cash flow. That won't happen until 2027. So analysts, obviously with all this investment, what are the analysts saying that's? Well, how will you continue to manage the expenses to get to profitability? Well, what's the potential to get cash, to actually monetize this software? What can we really do with this? Regulatory risk, including changes. So right now, I think it was $7,500 per vehicle, a credit. And they've forecasted as if they don't get that credit in the future, because eventually they're anticipating that those credits will not always be there. And then the idea of tariffs, how that may impact them in the future. There's question on that. And their big answer to that is that's not impacting us. We don't outsource our suppliers outside of the U.S. And of course, they produce in the United States. Their strategy was a lot of questions around, particularly on this new, more efficient plant they're building in Georgia. And then this cash idea. Are you going to be able to pay off your loans? So they've got plenty of cash on hand. But if I'm not generating profitability, any free cash flow long-term, am I going to be able to impact the business? Well, folks, that is what was said. So what do I know? Well, I know that it's a company that's not profitable, but they're moving in the right direction. If I compare it against Tesla, I see that they're on a similar path to Tesla to get to profitability. They're very focused on profitability and efficiencies, how efficiencies will drive this, as well as new technologies, new innovations for the future. Well, that's what I understand from a strategic perspective. Well, where do I go as I look at the financial information? This is the tool that we're going to give you in our technology that's going to walk you through how to think about the scoreboard. I call it the financials the scoreboard. It's going to tell you how they did. Well, don't worry. You don't have to have gone through a class to be able to do this assessment. On the left-hand side, you have the 5 drivers: cash, profit, asset growth, and people. Now, what I'm going to give you is the most common metrics any company will look at. Basically, these companies can use it on any company. But if you really want to understand a business, you got to look what are their key internal metrics. For example, you only have a net income number as a key profitability metric. Every company looks at that, but here they're looking at gross profit, they're looking at operating profit. So I would want to pull in an operating profit number probably. But to do a very basic look, this tool will absolutely help you on any company. So here's how it works. Here's the key metrics. Where do you have to go in the statements? You don't have to walk through a class with me where I walk you through how to look at the statements. It'll tell you where to go. For example, if I want to get cash and cash equivalent based upon my tool, where do I need to go? Please put it in the chat box. If I want to know where my cash is going, or if I want to see where the cash position, where am I going to look? It's the balance sheet. Absolutely. If I want to see cash flow, it's going to be the cash flow statement. Okay. Then if there's some sort of equation you have to calculate, it's going to give you that right here. So here's what I'm going to do. I'm going to do 2 or 3 with you, and then I'm going to just show you the number, and then we'll jump to the apply, and we'll start wrapping up for today. So let's go through. We want to get that cash and cash equivalent. As we said, as Dennis said, Denise said, excuse me, as Denise said, if I want to find my cash and cash equivalent, I'm going to go to my balance sheet. Well, folks, you don't have that, so I'm going to put it in front of you. Here's the balance sheet. I'm looking for cash and cash equivalents. Look at the cash and cash equivalents on this statement and tell me how much cash and cash equivalent did they have on hand as of December 31st, 2024. 4294. Now, what they're going to also do, they're going to roll this one in here. Now, cash and cash equivalent, the correct answer is the 4294. If you add those two together, that's what their executive team, they'll say we have about 7 billion. But cash and cash equivalent is right there. Now, you're close, Denise. Denise, this was 2023 number. They do a little bit backwards. It's interesting. You usually have the most recent number first, and then the prior years backwards there. So no worries. Well, let's go ahead and jump in and we got that number. Okay. So now we want to get our cash flow. Just humor me if you would. Based upon my tool, what statement do I need to go to get to this number? Excellent, Angela. Thank you. So I jump over my cash flow. I'm looking for net cash provided by operating activities. Now, don't get confused. This is 22 up here. I want 24 right here. So how much cash flow did they generate from their core operations? So it's net cash used in operating activities. How much did they have? Don't leave me hanging here. We're running out of time there. There you go. The parentheses. What is that? It's a negative. So again, from difference between all the cash that came into their business minus the cash that went out, they did not generate positive cash. They had a dip in their savings account to cover that $1,716,000,000. That's that number. Well, folks, you can continue to do that. If I want to get my incomes, my total revenue, I jump to my income statement. I jump over here, and right here, I got my total revenue number. So I then plug that in, 4970. I could do it again. I got to get my net income. I'm looking for the line item called net income. I go to my income statement. Right there at the bottom, it's this negative number, 4746. So now I do my first calculation. I take my net income number. It's a negative divided by this, my revenue number, and I get this number right here, 95.5%. Now it's negative. What does that tell me? It says for every $100 they brought in their company, they actually generated a loss at the bottom line of 95.5 cents, $95.50 of loss. Now, folks, so basically they're not close to breaking even quite yet, right? Now it's better than where they had been, but they're looking to, they got to get that positive over time. Well, folks, that's how the tool works. So what do you do? I'm going to go ahead and fill that out. Here's the rest of the numbers to get to it. Now, typically what you want to do, you'll notice this other column is called comparison. I'm going to jump in. I'm going to put 2023. So even though their numbers are down, they're not as strong, you'll notice that their cash flow is improved. They had, for every, how much cash flow they generated 4.8 billion negative cash flow. Well, they've improved to only 1.7 billion negative cash flow. They look at, for every $100 they brought in this company, they had a loss of $123. To every $100 they have brought in the company, they have a loss of $95.50. You look at growth numbers, you got 12% growth here. Our net income is down year over year. So again, still work to be done. They've got to focus on that. Now you could then go and do this against Tesla, see how Tesla's numbers to kind of get a feel for what's going on. Well, now what do I know? I finished the analyze phase. What do I know? Well, folks, I know that they've had a tough year, profitability tough, etc. Well, the last stage is that applies, probably the most important stage. There's basically three things you're going to look at. What were some of the new insights you gained as a result of this analysis? So once you capture that, what did I learn? Well, a couple things for me. Although playing a significant role with electrification, still looking for profitability. Finally hit gross profit in their Q4. Strong software as a service is an opportunity. Strong cash to make it to profit. They have enough cash to survive. And the key next opportunity is this R2 foundation. Why is net income growth year over year negative? Their cost structure. We'll have to go back to the P&L. We're almost done. I'll jump back and I'll pull a P&L up for you. But yeah, it got worse negative. So the gross profit was profit in that one number, but they had other expenses that were that impacted their total bottom line impact. So kind of a tough year for them. Well, so what would I do if I'm an employee of the company? Number one, I got to focus on cost discipline. That's one lever I can impact to drive profitability. This idea, how will we work together, get better operational efficiency? I can't be siloed. I can't just be thinking about my role. I got to think about how I impact other roles. That's how you get greater efficiencies to drive greater lower costs for the organization. And then the idea of whatever I can do to help drive new product, software, and service growth. That's where they're going to make money. The new products, getting that R2 out, and then being able to drive software as a service, making money on their software is good opportunities for them. Well, folks, if I was an employee, my next step would be then I got to sit down with my manager. If this was my company, I sit down with a manager, share what I saw, and then share my three objectives, the things I think I should do to impact that. If it's a customer that you partner with, go to your marketing team and say, so how do we develop a greater partnership, or how do we help our customers drive to their results? And then how can we compete against others if it's a competitor you're looking at? Well, folks, that is the tool. Takes you probably an hour's time to work through it, discuss, and get to where you've got an actionable plan of what you can do. Well, folks, you remember the very first step was to do that prepare, and in there you had to review your notes. Once you've done this one quarter, it's just coming back to your workbook. What did I say I'm going to do? How are they performing? So then when you jump in the call, you can see if what they said they were going to do actually happened. Well, folks, that's the tool. So here's my question to you. Who are you going to assess? We got in the chat box, the company's, the link to access the tool. So make sure you download it. Next month, we're going to look at Tesla. We'd love to have you. So go to our website, access the tool. Use it on your company. It's a great resource to drive results. Prepare for the next earnings call for your customer, your company that you work with, or a company you want to invest in. And/or come back and work with us. You've gone through this now. Take the tool, come back, and let's look at Tesla at a deeper dive. In addition to that, if we can help you and your team build your credibility, build your company, and build your career, please reach out to us. We've got a self-paced online, if you want a refresher on how to look at this information, we've got a great tool there for you. If not, if we can work with your teams, please reach out to you. Love to work with you. Folks, thank you very much for your time. Have a great day.